Okay, Shristi, thanks so much for taking us through that. Let's get a better sense of what to make of these numbers. We have Mr. Ashwin Patil, Head of Fundamental Research at LKP Securities, joining us on the show right now. Ashwin, hi, afternoon, and thanks for your time. Talk to us about your reading right off the bat for M&M's numbers, largely inline set, like my colleague Shristi was flagging off.
Yeah.
Have Ashwin on a patchy line. We'll try and reconnect that. Just getting some more details coming in from M&M. We have the management commentary by Dr. Anish Shah, the Group CEO and Managing Director. He's saying he's happy with the performance that M&M has seen. Auto and Farm has maintained its leadership position on the back of steady customer demand, strong product acceptance, and unwavering focus on operational excellence. Okay, we have Ashwin back with us on the show. Ashwin, can you hear me now? Talk to us about your take on
Yes, I
these
can.
numbers. Yes, go ahead.
Well, I was saying that we are always used to M&M reporting, a great set of numbers like ahead of what we are expecting. But this time they have come up quite in line. So it's not a very, I won't be very happy with the numbers because if you see, this slight reduction in the ASPs because the launches that the company has done, the 3XO which the company launched, it is slightly in the lower range, the low ticket kind of vehicle, and that's why the ASPs have fallen a bit. And at the top line, the numbers are slightly below our expectations. Even at margins, if you if you look at the market share, I would say that they have lost a bit market share on the tractor side. And if you see at the margins as well, we could have seen a slightly better margins, but because of the RM, cost basket, which has slightly firmed up, that has resulted in slightly lower kind of margins. I mean, the growth in the margins is not that strong, I would say, rather. And at the bottom line, definitely the one-off expense of the labor code. If we remove that, then the PAT has grown, much better. But overall, at the operating level, I had better expectations from the company, but nevertheless, the stock remains a buy for us. So we need to revisit our numbers and look at how much upside we get from these levels.
Actually, a very valid point over there that we are used to better than estimated numbers for M&M, and this time around there has been an inline set. But with respect to the internals, Ashwin, wanted a sense on the auto EBIT margins. What I can see, the number stood at 9.5%, and for the farm equipment, the number stood at 20.3%. Your take, are the numbers in line to what you were expecting, or any of these segments have actually disappointed you more?
Well, on the auto numbers, we were expecting slightly better margins. However, on the tractor side, the margins have come slightly better. So it's like offsetting each other. But, autos, definitely, as I said, the launches which the company had done this quarter, the low ticket 3XO. So that is the reason why, we have seen sub 10% kind of margins on the auto side. I mean, the company has been reporting that kind of numbers, but we were expecting slightly, maybe close to 10%, maybe 10.1% kind of margins we were expecting on the auto side. So it's slightly disappointing on the auto margins. But yes, on the FES, the company has surpassed our expectations a bit.
All right, Mr. Patil, thank you so much for tuning in and talking on the earnings of M&M. But we're also joined by an equity